Well, I think that's a sentiment issue that we all have, and it's a challenge that we all have to balance what will thrive and survive in the second half of the year and into 2021. I think that if you look at travel and leisure, we certainly expect that consumer spend is going to be a bit slower to come back online. I do think we need to be selective even in the consumer spend in the restaurant and retail space, however. I think that, it's great what Moynihan said about consumer spending coming back online and evidence of that in payments. However, that's going to hit we believe that will hit a plateau in the second half of the year, and we're not going to get back to the previous levels of consumer spending. So it's going to be very important over the next couple of months to think about things like, even in the financial services industry, what are those necessary things that are going to continue to have to happen in the economy that can move us forward in the second half of the year in that low growth environment that we were hoping would start to accelerate, but obviously isn't going to, given what we've seen with the virus.
So what types of names are you talking about?
So, if you think about sort of retail and you look at large brands like Nike, they're certainly struggling right now if you look at the consumer juggernaut that is Apple. If I think about more regional restaurant plays, I know the QSR numbers are picking back up, but I think there's going to continue to be consolidation in the restaurant chain. And then retailers, you talked about some of these low quality rallies we've seen with things like L Brands and Gap. I don't think anybody is going to go back to the malls just because we're able to go back to the malls. So I think we need to really differentiate on what are these sort of bear market rally stocks, whereas these sustainable consumer brands that I think are going to be able to have a competitive advantage and a moat around their business that doesn't rely on foot traffic.